Hello, everybody. Happy Sunday night. It is April 27th, 2025. I promise you a really fun brief tonight. We're going to go a little bit down the rabbit hole. You're probably going to have to take that red pill with me. Just do it. It's kind of fun. But hope everybody's had a good weekend. I'm going to give you some levels that I think are going to be the levels which kind of tell us whether we're going. I mean, we could be going to new highs, folks. Or we have another leg down of the sell-off. What's happening is it's starting to shape up to almost a exact level. It's a little higher, but we'll go through that. I was just talking to Spence. I got out today. The waves, man, it wasn't any good, but I just need to go out. I'm going to do some travel this week, Tuesday through Thursday. So I'm like, I got to get some water time. And I was telling Spence, if you guys, maybe there's some people joining from the West Coast. If you're on the East Coast, boy, I tell you, we have this thing called an algae bloom that's going on in the Pacific Ocean, and it's really bad. And so all of the LA fires, all that sludge, I think they said it was billions of pounds of toxic waste went into the Pacific Ocean. And so each year we have this brown tide that comes in, and it's actually pretty trippy because when the waves break at night, they actually turn green and purple. There's different colors, but it's called the red tide. And it happens every year, but this year it's really toxic. And so the fish have been basically digesting all this different toxic, which makes the fish toxic, which makes the dolphins, sea lions eat the fish. And so they're literally beaching themselves. My son's it's a pretty cool job. He's a Del Mar lifeguard. And he says there's 3 to 4 mammals a day beaching themselves, dying. SeaWorld's rescued, I saw today, 180. Of these mammals to try to bring them back, to health. So we'll see. But enough on me. It's been a great weekend. Hope you guys have had a good weekend too. Let's get to the charts. I told you we have to take the red pill tonight. Anybody know what this is? Metatron's cube? Metatron's cube, this little circles and squares and triangles is in folklore, Archangel Metatron is responsible for the geometry in this third dimension and all the dimensions. And so this little Metatron's cube, if you look at it, every single thing that's outside this house, inside this house, in our body, everything that exists in the third dimension can be contributed to the fractal of Metatron's cube. We're going to actually show that in some of the charts. It's kind of trippy. So let's get to it. Here's our New York Stock Exchange Index daily. You guys know I've been focusing on this red line. Red line is what's called a 1x1 trend line. What that means is from the all-time low on the New York Stock Exchange Index, which was October 3rd, 1974, a good 50 years ago. What we have, that red line, is over one calendar day, up 1 point. And so this is the daily. If you go to a weekly or a monthly, the first time it touched that, sold off big. Second time it was coming up and touched it, it kind of hung out, went to new highs, basically blew through it. I would figure that it might bounce, sliced right through it over here, you can see. But then it did an outside return. It came back, smacked it, and went down. I'm like, okay. And now it's blown right through it. So I think this might be the last time that I show the 1x1 trend line in the New York Stock Exchange Index, because it's really not doing much for us. I thought it would. When you have a price and time equality, that's what we want to be doing. So that's where we want to be trading. That's where we want to be managing risk. What am I seeing on the NYA? Well, we're coming up to the magical 618 retracement level. We also have this structure here. I would imagine we'll hit some resistance. Will we start the sell-off again? I don't know, but I will show you a very, very nice sell pattern on the S&P. And again, it's just probability, folks. These patterns work really well, but they're not right all the time. And the only thing that you're right is by managing the risk. So this sell pattern that's coming up, if it fails, we're going to new highs. If it works, then we could potentially be going into another low. So we know that level exactly, and we can come up with a game plan, whether you're a day trader or a long-term trader, okay? So I wanted to just kind of, rewind the videotape a little bit, because we do have Iran looking a little ugly. We now have Pakistan and India looking pretty ugly. course, we have Russia. That's looking pretty ugly. We have tariffs. We have all, gosh, it's nuts right now. But this level that the S&P hit was forecasted back in September. This isn't abnormal is where I'm going with it. This was the level. You guys can see it came up, it finished it nicely, and we sold off. Sold off pretty nicely. What I want to show here is this is something I posted in research, which with the research team at All-Star Charts, and it was all patterns as far as the S&P. We had two projections. Here's one, here's two. And what I did here is a lot of people know the 618 retracement. A lot of people are starting to get the 786, 50%, 382. But you can also use the ratios of the equal octave scale of music. So 0.9438 is the inverse of 1.05946, the 12th root of 2. That's how we use the ratios in math to equal octave scale of music. That's how we tone it. So what happens is if you find resistance at the 0.09438, then the inverse of that, 1.05946, right here, where the projection goes, should be support. So we had three levels. So as we're, coming down hard, these were the levels to watch. And as you know, the market, it just bounced right off it right here. Very nice. And so now this is what we like. I've had let's just call it a pullback. We had to move up. We had to move down. Now what do we have? We can project. First off, S&P, you need to get through this gap. Big gap. You can see on the massive, what was it, the fourth largest day ever? It closed the gap here. But this is a pretty big gap because the projection goes up to 5740 to 5763. That's our level. That is a sell the S&P. Does that mean it's going to go plunging low? No. But this is the level, 5740 to 5760. That's it. Of course, we've got a nice confluence here right at old structure. I think this might be resistance. We might bang around a little bit, but ultimately, this is our level. That's it. That's it. We gap and go above that, then we could go up to these target zones. Remember, these targets were never hit. Those were also targets that we had. What I found really trippy was I actually went to the, the research team at Stock Market TV, and I was like, man, I would love for the S&P to top at 6180 or 0.618. That would be cool. But anyway, we have this sell pattern fail. I think it's a good bet. We're going to 6,200. If we don't, we're selling off. Okay? Keep those numbers in mind. 5740, 5763. Hello, Rachel. Thanks for joining us. We're talking about ratios. Ratio analysis is so easy to help with the different inflection points. This is staples over the New York Stock Exchange Index. Why the New York Stock Exchange Index? We've talked about it. The New York Stock Exchange Index is 5,000, right? It's not the Dow, which is 30 or 500 of the S&P. It's a lot. So, well, that sucks. This is dumb. All right, well, then it's dumb, but you can waste your time watching. So thanks for joining. And if you remember 2 or 3 weeks ago, this converging trend lines, it smacked right into it. And at that point, that's when the market found support. So what are we doing here? We're doing staples over the overall stock market index, the New York Stock Exchange Index. Staples is a measure of institutional risk on and risk off. When the ratio is going up, 2007 to 2009, the market goes down. When the ratio goes down, the market is bigger. New York Stock Exchange Index, it basically means risk on. We went up, smacked into these intersecting trend lines, and since then we've been rallying as expected. So now what do we have staring at us? Well, we've got a wonderful buy pattern. So remember a 5740 to 5760 on the S&P, and now look at the ratio. We have 1, 2, 3, 4, 5, 6 different. Hello. Hey Ray, what's up, dude? Sorry, I had to look at your name. My eyes must be getting worse, or maybe I've got some eye infection from being in the ocean today with all the algae bloom. This is the key level. So you can see that the sell pattern that we talked about, 5740 to 5760, is about the same distance away from the XLP NYA hitting this really crucial, important support zone. Here's the intersection of the trend lines we talked about. So if we can find support here and start back up as we hit the 5740 to 5760, that's going to be a very high probability risk-controlled entry to try to short it. If you're a bull, you want this to fail. This could be a day trading opportunity right through these two things here. So we've got two very well-defined levels that will tell us if we're going to new highs or whether the sell-off is going to continue. I don't know which one will work. I really don't. But here's really precise levels. And why? I love when I have confluence of ratios right on a measured move. See the measured move here, the blue? Here it is right here. So keep an eye out for it. We've also been talking about the importance of the dollar and the yen. The market's been rallying. The dollar's been getting stronger against the yen. By the way, the dollar euro is something you really got to be watching. But we still haven't hit the pattern. Now, this goes a little bit lower too. But here was the last major correction. And then you've got the projection. So this 136, 137 level on the yen is a really key level. We've talked about how important the yen is with the dollar and the other cross currencies. This is our level. And then the 786 level. If the yen is going to continue to strengthen, which our thesis is it might and will, from a big longer term perspective, it will what? This pattern will fail. If not, it could be a 2 or 3 day. I would expect support. Look at the structure over here, guys. 1, 2, 3, 4, right? Look at all this. So this is a very important level for the dollar yen. Why is that important? Well, when the dollar is getting stronger against the yen, historically, the market's been able to keep going higher or at least neutral. When the yen has gotten stronger, it's been negative for stocks. That's why during this whole sell-off, stocks were going down. Okay? Keep an eye on that level. Now, by the way, we've been looking at this level for like a month, 4 weeks. That's the beauty of using leading indicators and doing these projections. It's pretty amazing. Why? We showed this chart the last time. This is the dollar yen versus financials. It's 2 hour, 120 minutes intraday. And we had talked about, here was our projection. This should have worked. It didn't. What happened? It kept what? Selling off, which what? Stocks went higher. This was the level we were talking about. It failed. But look what's really interesting, folks. Again, you want to keep an eye on these levels. It bounced off the 786, did a perfect sell pattern, and it came back to the 618. So you want to know, you want to keep these levels. Even though one of the levels might not work, you want to be aware of them because a lot of times they like to kiss it and then they go bye-bye. So we haven't broken to new lows on this. If we do, we've got a what? A massive. Oh, Tommy, thank you. I appreciate that. We have a massive buy pattern. So again, I don't want to confuse you guys. This right here is a 2 hour. We're intraday. We're in here kind of groveling. This takes it out to a daily. See the D? And now we have this price projection. Bam. And then we have all these ratios in here. So for the market to keep going higher, this will probably break down and then it's going to seek this level. This is a massive level for the yen and the financials. We've shown in a couple prior briefs how important this is, where this ratio, if this ratio finds support, the financials really eat it. And when it doesn't, the financials do great. This is a big one, folks. So we didn't hold support. We're still hanging out a little bit. And it didn't, there's 1, 2, 3, 4 that were below the 786. By the way, that is not a Fibonacci number. We can talk about that. Certainly looks like it's going to want to continue to break down, and then it'll seek this. So while, let's see, how do we say this? While the market's rally has been very impressive, what we need to take into account is there's still targets out there. And we're not out of the woods by any stretch of the imagination. So we really, really, really need to keep watching these levels. This level right here, this might be a mortgager level and buy. It's a beautiful chart. The problem, well, if it fails, first off, I think the yen, my thesis that the yen hit a major high about 6 weeks ago, was it? 8 weeks ago? Well, it hit a major high in July, right? Will be suspect. It will. Watch this pattern, folks. I haven't updated this chart. I've kept it for a long time. Why? Because there's really nothing to do. This is a massive pattern. This 3, I don't know if that's the low, but I want us to sell off because I want to get to this point. About 103 on the long bond, 101 to 103. Look at all this confluence here, folks. And then again, what I did was, this is the largest corrective move as we went up for 40 years. And all I did was I did a harmonic of it. This orange is the square root of 5. Bam, goes right to that level. And then what I really like is this green. I tried to break them down for you. That's an exact 1.618 extension. This is what we call a butterfly pattern, and we're going to talk about that in the training course. JC and everybody's going to help me put together. It's perfect, folks. So we got people dumping our bonds. We've got the tariffs. Not looking great for the home team. This is massive support. And the reason I kept this chart up is because I haven't touched it. The levels really don't move much, folks. They're the levels. That's our level on the long bond, about 100 to 103, 101. We want it together. And remember, I'm long TBT. So TBT still goes down. Look at this. Woo. Now remember, this is intraday. This is an hourly. But this right here is a buy pattern. So about 34, 33 to 34. Thanks, Joe. Joe said, great call on UNH. I forgot what I even said, Joe. I remember looking at it now. But I don't even remember what I said. But this is a great buy pattern. Buy TBT. Buy TBT. TBT starts going up. Long bonds go down. We get one more little rally. And then hopefully the long bond hits that level. And then we'll really know where we're at. Why? Because these are the levels, folks. And then I like to do if then. If it works, then go, long bonds. If it doesn't, I'll keep my TBT going, right? It's really that simple. And all the other noise that's out there, and it's not noise, it's extremely important, but the chart is going to tell us exactly what the people buying and the people selling are doing. That's it, right, folks? So just pay attention to price and time and work these patterns. All right. PSIL. PSIL is a psychedelic ETF. No kidding. Yeah. And I'm long PSIL, 1,000 shares. My mindset is I'll probably hold it for 5 years. Yeah. If it stays in, if it stays an accurate ETF. But let's take a look at what's going on here. First off, I work with a nonprofit, and I work with a lot of veterans. I myself have done psychedelics, most powerful thing I've ever done in my life. And there's tremendous amount of veterans who are seeking out this type of treatment, whether it's ketamine, MDMA, psilocybin, 5-MeO, ayahuasca, or ibogaine, the Mac Daddy one. They are pretty impressive and pretty amazing. So this is a fascinating study. Let's just track it. I'm already long it, folks. I'm just letting you know. But look at that spike. When did that spike come? That spike came right at the end of 1, 2, 3, 4, 5 waves down. The most important thing is something that we learned in the CMT process is this is a 14-period RSI. And you can see it was finding support down here in about the 20s, even dipped down a little bit, right? And then it, bam, popped up, But where did it find support? Higher in the 40s. The RSI long-term, weekly, monthly, it will tell you when there is a change in trend. If we keep going higher, this is the count I'm seeing. Remember, I told you guys about my counts, like my golf game. So if I start counting and I'm pushing and give me a 5, I probably got a 7, just because, anytime I go to the subwave of a subwave and expanded flats and corrective moves, it gets crazy. 3 waves, corrective moves. If it gets more than that, I just wait. But this is a pretty good count, and this is a flat. We could be really starting to make a run here on PSIL. And what would be fascinating is we're watching potentially the beginning of a bull market right now. So how do you play it? Resistance, resistance, resistance. I don't know. If we get a weekly or a monthly close, because we're looking at longer term, above this level, it's looking pretty good, folks. Looking pretty good that, this could be the beginning of a new bull market. So roll with PSIL. Take a look at it. Let me know what you think, okay? But this was the big thing that caught my eye. These transitional zones of bear and bull market support and resistance zones with the 14-period RSI. I think it was CMT2, which, oh, by the way, I failed. I did flag that one. But I passed, and next thing I know, I'm teaching CMTI. By the way, that was how I met JC. I met JC, Greg Bender, Paul Sienna. It was great. We had a good time. And it was right at the great financial crisis, folks. So keep an eye on PSIL. XLF, getting into the red pill now, folks. Getting into the red pill. First off, XLF found support on basic polarity where it should. There's the polarity. Resistance, 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 resistance. I'm trying. You're going to fail. I'm trying. I made it. Come down, hit it, gone. What'd you do, Joey? There was a post from a couple of weeks ago. When you look at it, you'll remember. Okay, thanks, Joey. Caton, give Mindman a look, Bart. I will. There's actually a big psychedelic conference in San Diego 3 weeks from now in May. Yeah, I could tell you some story. Very fun. But look at XLF. The measured moves have worked great. And so when this sell-off started going, I wanted it to go up to here. I'm like, dang it. When it stops here, you're kind of in no man's land. But as we can see, this measured move was the one that it respected. The harmonic of that is 0.886, another key one. 0.618 of this blue was this move right here. You could probably see it just taking my forefinger and thumb, and it went to here. See that? So big target on XLF is about 50, let's just say 56 to 57.50. But here's where we're going to go take a red pill. You guys ready? Here we go. So the thesis behind everything that at least I'm doing and what I've studied with a lot of mentors is even the very hairs on your head are numbered. It's all waves. It's all vibrations. And so these waves are frequency, they're rhythmic, and they abide by what? They abide by music. So the square root of the frequency of a string, the vibration of a string when you pluck it, it's equal to the square root of its length, 1 over the square root of its tension. Square roots and 1 over the square roots, their inverses are huge. So how do you figure out which vibration, which measured move is important or not? Well, they're all fractals. This whole thing's fractals. Look up Mendelbrot. It starts with, and I could pick any one. I just picked this rock hitting the water, folks. I just picked it because it looked good. I was like, yeah, that looks pretty good. It's a pretty big correction. It's got a nice angle. So what I did was I just simply drew the rock hitting the water. How high, how thick, how much the rock weighs, the salinity of the water, blah, blah, blah. When I drop it, it hits it. And what happens? Waves emanate. A very good one to use is an IPO, right? Go Catan said everything is a Fibonacci sequence. It actually is. Maybe a little bit, but definitely. By the way, 0.786, square root of 1.618, 1.27. 1 over 1.27, 0.786. That's where it comes from. So now what do? So here's the rock hitting the water. And by the way, folks, I've never done this before. I was just like, I'm going to have some fun. I just started doing it. What we're seeing right here is the Vesicus Piscis, Vesicus Pisces, whatever you want to call it. And if we go back to that first slide, these are the fractals that are within inside of Metatron's cube. Did I not tell you? And they are the square root of 2, square root of 3, square root of 4, square root of 5. So from this rock hitting the water, that becomes what? The radius of a circle. We take that circle and we make it a circle. Duh. Copy, paste, we make another circle. Where they intersect, that is the bladder of the fish. That is the Vesicus Piscis. Sure looks like the portal that us humans came out of. Just saying, folks, it's pretty doggone amazing. So this black line, this gray line, this green line, this orange line are what? They're price vectors, folks. So what I do is I take these, and what do? I just move them to price. So here's the price vectors. The top of this arrow is at 64. That could be a target, but check this out, folks. I'd never seen it. That's why I went, really? This is the black line right here. So when I take it and put it at the all-time low, it is the exact high. Come on, man. Then what's it do? It sells off to support of what? The high of the orange vector. Really? I mean, this is crazy. What was this move? All the way up to here. It was the gray line. See where I'm going with this, folks? But as we talk about it, price equals time. So then what do? I just roll these vectors over here to time. 2.236, square root of 5. 1.732, square root of 3. See where I'm going with this, folks? Pretty doggone amazing. And then all I do is, these are our time cycles. Look at this green one. Boop. Look at this one. Bam, it's that low right there. Gray. I mean, it's crazy, isn't it? I don't think you probably could. Maybe if you teach an AI this, wink, wink, nod, nod. There's slippage. My drawing could be off a couple points. What I'm trying to show you is, why do we use the square roots? Why do we use these harmonic ratios? Well, because that's them. And we set those harmonic ratios, we set those fractals to what? To the harmony and the rhythm of the move. We're going to do another one that'll blow your mind too. So all of these price vectors and timing vectors, all they are harmonic fractals of the Vesicus Pisces from this rock hitting the water. Folks, I could use this little guy right here. I could use this sell-off. They'll just be harmonics. But I just chose that one. And that's why I went really. Because folks, you guys are realizing I'm not trying to BS anybody. I was like, you got to be kidding me. When it was the exact high based on the Vesicus Piscis, based on this ratio, or excuse me, this rocketing the water, this measured move. What? But it was. All right, enough on that. But let's go back. Keep an eye on this. Remember, XLF. We got that 56, 57, 50, and then the top of the the top of this green line right here at 64. I think those are going to be powerful targets for XLF. And remember, we've talked about this before. This market ain't going down if the financials are going up. Period, dot, end of sentence. Game over. Banks lead us up, banks lead us down. Banks find support. I mean, folks, you got to look at this, right? Even into 2009, it wasn't like no brainer. It was like, ooh, should we start this? This was a pretty nice candle, nice wick, It's like, okay, you know what? Bam. Let's start going back up. Look at this hammer, folks. Pretty doggone impressive on a monthly, right? We still have like 4 or 5 days left. That tells me that I don't know if it really wants to go down. If the financials are still going up, market ain't going down, folks. So that's when we shift to, we've got a target of about, I don't know, $10 higher. And then obviously 64. Okay. That's all I want to say about that. Gold futures. If you've been listening to me, folks, I've been looking at gold. JC put something out. Bart's looking at a big short on gold. Well, I was like, why did he do that? I'm looking for a top in gold, but here's how I want to play this with you guys. 1, Iran. Yeah. 2, Gaza, Israel. Notice I'm not saying who's right or who's wrong. I'm just saying it is a massively, let's go back. We got Iran, we got Israel. We actually have Europe. They want to go to war with Russia. Who knows why? Turkey wants to reclaim the Ottoman Empire. Ukraine, the tariffs in China are a pretty big deal. Things have been heating up over in Asia too. Gold ain't going down in the height of a geopolitical uncertainty. So I find this as a technical pullback. What I ultimately like to do is look to buy it probably mid-May. So about 2 weeks from now. Why? Because there's a lot of cycles coming in that are mid-May is potentially a big cycle. And I do think gold is topping. I just do not see it topping in this environment. But again, what I wanted to show you, and so let's just take a step back and see what happened here. This was 2 weeks ago. I posted this on our little nightly chats. I had targeted the 35, 32, the 1.27. Remember that number? Square root of 1.618 price projection from where? From $20. Remember, gold was fixed at $20 back in like 1880 to about 1920s. Then it popped to $30, and it ran at $30 into the 1970s when the what the heck was that called? I can't believe I can't remember it. Sorry, it'll come to me. What was that called? And then it started to float, right? So the day of the first float, Bretton Woods, there it is, was back in 1973. Made the low in August of 1976. And I mean, folks, again, Elliott Wave, I love it. I hate it. But I try to count. 1, long correction. 2, 3, 4, 5. I mean, 1, 2. We're in a third wave, 4, 5. Sure. But we hit resistance. We had this level ID'd 2 weeks before it hit. That's where I'm going with it, folks. What the heck is going on where the biggest market right now, and everyone's trying to figure out the geopolitical uncertainty, gold, it went up to this level, and all those people who were buying stopped buying and started selling. What? And here it is, folks. Bam. Right into that level. Again, price, time. What we do here is we project, then we extend, then we retrace, then we throw, an RSI up, look for divergence, and then we look for structure. And so what I'm doing here is, yeah, it is pretty crazy. Catan, he said, insane gold is only up 10.5 times since 2000. Yeah, it's pretty crazy. But what we got to look at too is this correction here. This was 2010. This is a 5-year correction. Crazy. So this is a big deal. But what I used here was Adam's pitchfork, and I used Adam's pitchfork, and it banged right into the resistance. I used Adam's pitchfork here, and what I did was I expanded, the pitchfork by 1.618. That's this red line, and bam. And there's our projection. It went right into the 127. But here's where it gets a little trippy, folks. Take another red pill. As it went up and hit 34.28, 3,428 calendar days ago was the exact low right here on 12/3/2015. Price equal time. When that price was hit, we were at the exact low. Maybe we're at a big high. See how it works? So anytime you go into these price levels, just take a basic little calendar and say, hey, what happened 3308, 3,308 days ago? Or you could do 33 months. See where I'm going with it? And so we live in a world of polar opposites. We live in a world of polarity. So if the price is at a high, then what happened from a time was a low, then this is why we hit the resistance in gold, folks. So again, big deal with gold. It's gonna. I see a two-week pullback, and then we're probably gonna want to buy it if the shit starts hitting a fan. And I don't get married to it too much, because this could be one big parabolic blow off, gold up into 4, maybe even 5,000s, and then we might be able to just put a plug in it, quite frankly. But again, with this uncertainty, I don't think we should be shorting gold. Let's let this thing pull back, and then we'll get at it. Okay. Here's a big sell pattern. Everyone just take a chill. What I'm trying to do is show you how all the harmonic moves are pretty much the same. Let's focus in the center here. Low to high. Low to high. Project this gray. Bam. Nice. What happened? Sold off. How much of a sell-off? This red line. So now we go copy, paste. Here's the red line again. Notice this was a spike low, and then we found support 1, 2, 3, 4 months of it. And here we are up here. What happened? We projected, and wham. Exact, folks. We also had what? We also had the purple line. See where I'm going with this? And so this right here, copy, paste, is the same fractal that's occurring here. Okay, that's what we're talking about. So now what do we have? We have a projection. Goes what? A little bit higher than the 0.618, just like this one did. Then it sold off. So sell Newmont Mining 64.53 to about 65.50. If that doesn't work, we're going to have pretty big resistance at about 74. And then I just threw in a rudimentary time component. You can see it's not as long. Sometimes they're exact. Why do you think this could be happening? Because that's either a planet or planetary pairs that are causing this fractal. I'm sorry. That's what it is. By the way, I pulled this book out for you guys. Pretty good. Trader's Guide to Financial Astrology. Yeah. Anyway, and oh, by the way, this is 30-Second Jewel by Connie. Unbelievable book. Unbelievable lady. Look how thick this thing is, folks. Boy, you want to get a headache. Just try to understand that book. Anyway, but I'm trying. So Newmont setting up for a great sell. Setting up for a great sell. The last thing I want to show you guys is keep an eye on these trend lines. I think it's Patrick. Headlines over trend lines, or trend lines over headlines. I think that's pretty cool. Another setup, Newmont Monthly. Why important? Well, because of gold. Gold keeps going higher. This pattern will sell. But what we really need to look at is this 0.618 is a price projection. And I went all the way back here. All the way. Actually, no, I went from here. So I price projected here. And that 0.618 price projection on top of the 786 is another big deal. $74 is huge, but really we're here at 64. Yeah, Marley, it's pretty good. It's really good. Larry's awesome. He's such a great mentor and friend. It's awesome. Here's another one, folks. Now, if you go to my blog, I had actually looked at buying lit because this correction was occurring, and it was occurring in the same price and time. And so I think it was right here. You can see we bounced around a little bit. Actually, I think it was right here, but it failed. Now we're at another one. Where are we? Well, look at this blue measured move here. This is the biggest corrective move. Blue line. Copy, paste, blue line. about 29 bucks. Again, this is log scale, folks. See, important. And so now what do we have? Well, here's the green, bam. Here's the dash blues, here's the dash blues. So this whole move was governed by these measured moves. Here's that same measured move into a spike. Here's that green here. Here's the big measured move. Here's the harmonics of it. Pretty crazy, huh? So we might want to be looking at buy lithium. And if we go below 29.88, we're wrong. Get out. I should have done this one too. You see this trend line? Bam. I like to draw that in. Maybe I'll take a look at that here in a second. Lit. Buy lit. Get out below 30. We'll be wrong. This is another thing I wanted to show you guys. Again, taking a little red pill tonight. Basically, all we do here, this is the equal weight index of the S&P. I think it's 2x. And what I was trying to show is from the start down to 263.64, all I did was multiply 263.64 times 101.05946. Every 12 times, it's a new note, 496. What happened at 496? Resistance for years. Next octave, 992. A little resistance, but look how it bounced around here. Pretty crazy. Next octave, 1985. Bam. Next octave, 3971. Market banged around in there. Next octave, 7496. Basically, this ETF of the S&P Equal Weight Index completed 6 octaves. Undeniable, folks. Undeniable. What? And so here's what's crazy. Who knows what's going on here? But somehow subconsciously, we're paying attention to these numbers. And this is music, folks. This is all it is. From this as the beginning note at 263.64, I just multiplied it by 1.596. I got a little spreadsheet. Pretty easy. Keep it very interesting. Now, when we look at the distance between these octaves, what do you think we can do with that? Yes, I didn't do it, but those are time cycles. Here's the quick ones. Here's the quick ones. Here's the long one. Yeah, no kidding. Pretty cool. Here's when this is going to trip you out. Let's take the red pill again. This is a natural gas futures. It's a continuous contract. And we're going to play with the rock hitting the water. Here's the rock hitting the water. And then what I wanted to do is I wanted to find out what harmonic ratio could have potentially caused the high. 1.1892 is not random. That is what? That's a musical note. That's a ratio from the 1.05946. What's important is if you look, so every single point on this arc is harmonically connected. Every single one. And we know we have a good arc. Why? Because look at the market here. It respects this. It gapped over it. Support. Look how the market just kind of rolled up. Isn't that crazy? So when I looked at this having like a triple bottom, what happens at the top? It's the exact top. Musical polarity. Support becomes resistance. Resistance becomes support. Musically. Yeah. Pretty doggone crazy. It went through it a little bit. So if we expanded a little bit, probably would have caught here, here, and here, and it probably would have hit the exact high. But I think we get the point. It's all music and geometry, at least to me. So guess what we do? Here's the rock hitting the water. Bink. We draw the circle. That was what? That was that circle right there. I took off the 1.05946. And then I make the Vescus Pisces. Here's the price vectors. Okay. Guess what I did? By the way, I've never done this before. Never done it with natural gas. We've done it with natural gas and XLF. So here's the price vectors. Look at this, folks. Where the gap was, bam. Low to high, bam. Orange, bam. Black, bam. Gray, boom. We spiked through it a little bit, but down here at this low, orange, right at the high. So here are the price vectors. Here is the time cycles. So remember, what we did was we took these vectors here, We rolled them horizontally because why? Price equals time. There it is. Come on, man. High to high. Boom. This whole cycle, a dual time cycle met. This low right here, almost timed it exactly, folks. Oops. This low to high, bam. And again, let's go back. It came from here. What in the world is going on? Pretty doggone crazy. So what am I saying? Now we get back to normal stuff. Uh-oh. Everybody relax. It's a little busy, I know. Buying natural gas in the spring? Well, yeah. Trade what you see, not what you think. Well, let's just talk about it. Time cycles. These are static time cycles. But look, it's worked pretty well. Low, low, low. May. That's a low. Right at about what? At about 3.05. But what I really like is down here at about 2.8. LA wave count, 1, 2. This, I'm going to say, is a 1. Why? Because remember, wave 2 cannot go below the end of wave 1. So I don't see this as a 3-wave correction. I see this low as a big low. And so this is correcting to the vicinity of what? The previous 4th wave of a lesser degree right here. And so I think this whole level, about 2.7 to 2.8, is going to be huge. Here is the projection. Boom, boom, boom. It is what? It's a 1.27 projection. Then we did the retracement levels. Then we did the extension levels. And so we have a big, huge, massive amount of support in natural gas. If we fail it, okay, so much. 786 should, air quote, hold it. But really, this is where natural gas should stop. And again, folks, we could be really launching higher in natural gas. How in the world could that happen at the beginning of the summer and, spring? Geopolitical? Who knows? But what I really like is this polarity. So remember, I do PERS, project, extend, retrace, structure. I'm looking for polarity. I'm looking for polarity, support resistance zones that happen to lie on top of the projections, the extend, and the retracements. And so here it is. Just kind of cruise on down here. Resistance, resistance, bang through, come back, touch it. And now maybe we'll have another polarity. Measured moves. This is obviously one of the bigger corrective moves. We make that what? We make that our measured move. In this case, I took the red, the small dashes. That's a 1.618. The solid red, copy paste, bam, right on the projection. Really starting to get what? High probability. Fundamental frequency target, folks, that's lambda equal. What you do is you can create the frequency of the moves by the rock hitting the water. In this case, this is the low, 3.69. This is the high, 4.901. You divide them. Why? It's going down. This 0.7539 is what? It is the fundamental frequency. So I take that and I multiply it by the low. My target, 2.785, basically right here. The other thing we do is we can do square root targets. I take the square root of 4.9 minus the square root, and guess what? I'm right here. Big, big support zone. All that means is I think we've done enough to manage the risk. Joe asked, is it the same for oil or is it just a nat gas story? Joe, I would imagine it might be for now because I really am looking at crude separately. Let's just keep them apart. I've never really looked at that, to be honest with you, Joe. So I'll take a look at that. Maybe we talk about it next week, like how correlated they are. But I personally wouldn't think they are, Joe, but take a look. Let me know. Email me. But I'll take a look at that this week. But I am traveling Tuesday through Thursday. But yeah, Makes kind of sense, doesn't it? So take a look at that one. And so UNG is the ETF. By the way, I'm long UNG, a little bit underwater on that one. I told you that before, but look at this puppy. See how nice this measured move is? It's just beautiful. Copy, paste, bam. I do the horizontal line just to show you. Exact low. What do we got? Measured move, the most important measured move of this. By the way, I missed this one. Can you see how it's about the same? And then we have a price projection. What price projection? 1.618 on top of the 786 by UNG, 1490, $15. Now, remember, you could do a signal reversal candle on it. Wait till it gets above the structure, above 16, just to manage risk a little bit more. But this is massive support for UNG, just like we're at, or maybe just a little bit lower on natural gas continuous contracts. See how that works, folks? So now we get to the red pill. What the world is going on? So first off, thanks for staying with me. Really appreciate it. Hopefully this has opened your mind a little bit. Again, I didn't talk any fundamentals. I think they work. They're massively important, no doubt. But I just don't understand them. I've never even taken a business or economics course. I just do this charting stuff. So let's just go down the rabbit hole. Maybe a little deep. Let's go down the rabbit hole 2,000 feet, like the frickin' 8 tubes they found below the Giza pyramid. Folks, come on. Well, why are we talking about this? On the left is Metatron's cube. Embedded inside of Metatron's cube, are the pyramids. The entire Giza complex is laid out according to Metatron's cube. It's undeniable. And so pivot over here to the right, the meter, the foot, and the Egyptian cubit are all embedded inside of the Great Pyramid. So how we measure distances is in a structure that could be upwards of 15,000 years old or more. That, oh, by the way, sits exactly on the latitude of the speed of light. Exactly. And the longitude is equal to 1 over pi. And if Metatron's cube is responsible for every geometric shape in this third dimensional universe, and the way we measure was embedded inside of this amazing structure, what do you think is going on? I'd love to hear from you. Metatron's cube is embedded inside of the Great Pyramid, which actually sits on the speed of light, latitude, longitude, 1 over pi. And oh, by the way, what do we have? We have every single way that we measure already embedded in it. And this pyramid is at the center landmass of the Earth. I think there's going to be a lot more that comes out. So we went over a lot. This will obviously get posted. Spencer and I will get this thing up and running. Go back because we've got some really key levels. And I really appreciate you guys coming on. I really do. I'm stoked. I got out in the water, even with the algae bloom. Supposedly it doesn't affect us. So if I have blood coming out of my eyes, that's probably what happened. And I beached myself like a big whale. But everyone have a great week. Try to take off all the noise on your charts. Not saying you have it or not. As you can see, I just have price and time. And just look for the measured moves. They will guide you. And so the last chart I want to show you guys is just to let you know what we just went through. Because it's pretty trippy, folks. There we go. Boom. That'll be it. Is the Dow Jones. Take a look. You got it. Toffer, thank you. I appreciate you joining on. Folks, to put it in perspective, now, remember, these are powerful levels. And so all of us who've joined tonight, remember $28.48 on the Dow Jones Industrial Average. It was all the way back in 1896. That is the all-time low. That started this whole thing up to 45,000. Look, 47,013. Remember how we're trying to follow the 1 by 1 trend line, right? This is a 1 by 1 trend line from 1896. What I like about this is each day it only goes up to 47.14. So we in a month we're at 47.43. What am I trying to say? We might live through a time and price, no kidding, a time and price equality for the Dow Jones up at 47,000. Doesn't seem that big of a deal that we could go up another 5,000 points. I mean, folks, look at this. When we look at this candle, this wick, does that look bearish? Just be honest. Not really. Look at this spike. Bam. And it went higher. I mean, this is a thumping. So everybody here, we can say we lived through the great financial crisis because that is what we just did. Can you believe that? We just did the same corrective move in about 3 months that took 2 years. Almost exactly the same as a great financial crisis. So if we sell off again, what do? We'll probably take this guy right here as a measured move target, which takes us down a little bit more. I don't know if we are, but what I'm keeping in mind, what we need to keep an eye out for. Am I sharing the wrong screen? Sorry about that. Let me find this guy. How about now? Thank you, Spence. How's that? Sorry, guys. Donna, thanks. Marley, thanks. My mistake. I really want you guys to see this before. I got 3 minutes. Sorry about that. Thanks for letting me know, Spence. So I've said all this different stuff. We just lived through the great financial crisis. We want to keep an eye on this node, 2848. Why? Because 1987 crash, scared shitless. Oh my God. It hit an exact 382 retracement from the 2848 node. The 2000 to 2003 crash, 2848, an exact 382. The great financial crisis. Well, it went a little bit more than the 382. It closed at the 0.5, but at an exact 618 where? From the 1987 node. So because it held that, we're going to use that node up here if we come down. The COVID crash, 2848, exact 382. So where do we sit? We sit all the way down here at 27,000. Oh my God, the world's coming to an end. It's just a 382 retracement after we've gone up 45,000. So here's the last thing I'm going to leave you. Remember that there's a bunch of cycles that are hitting in the middle of May. The only place that we all can really go, like Canada, we got a lot of crap going on with Canada. They're not even close to the volume of the United States market. We have a lot going on with Europe. I think it's like a third or a fourth of the trading volume. If and when, I don't know, the shit starts hitting the fan, where are people going to go? The big institutions, they're going into the Dow, folks. They're going into the Dow. So we could have a parabolic blow off higher. I would really like to see a sell-off, one more sell-off so I can project. Don't know if that's going to happen, folks, but guess what? Remember that level on the S&P. That'll tell us everything. That pattern fails, we're going higher. But remember, 47,000. That pattern works. Let's go ahead and get a plunging low. And let's look for one of these key nodes to trade off of. Look at this. It's worked every single time, folks. Pretty doggone amazing. Here's the great financial crisis. That's what we just did. Amazing. So you guys are the best. Thank you for showing. Thanks, Donna. I really appreciate it. Toffer. Sorry about that little snafu, but this is a great chart. Keep an eye on 2848. Spence, thanks for joining me on a Sunday night. You guys are great. We should see you next weekend. All right, guys. Have a great week. Thanks for the emails. I'm getting some cool emails from you guys. I really appreciate it. And if there's something you want to see, email me about Wednesday or so, Thursday, and I'll put it on there. I'll take a look at it. But remember Peaceville, remember Newmont Mining, remember the XLF, remember the Vescus Piscus, all those different things. It's pretty cool. So, all right, that's it. Make it a great week. Hopefully this has helped. And I know I'll be trading them up. See you guys. Thanks. Bye.